Hello, this is Yearend Park. I will inform you about taxes that foreigners have to pay. Every citizen bears the duty to pay taxes. The same is true for foreigners living in Korea. Looking at the types of tax in Korea, there are income tax, corporate tax, inheritance tax, resident tax, property tax, automobile tax, and more. Taxes paid for the national coffer, such as income tax, corporate tax, and inheritance tax, are governed by the National Tax Service, and the taxes paid to local governments, such as resident tax, property tax, and automobile tax, are governed by the Seoul Regional Tax Office. Now let's focus on taxes and local taxes that are most closely related to our lives. If you are employed at a company, there is something you must do once a year. It's Year-End Tax Settlement. Year-End Tax Settlement is a system that determines the amount of income tax to be borne by workers by summing up their earned income during the taxable period from January 1st to December 31st of each year. The employer, who is obligated to withhold tax, pays monthly wages and the withholding tax amount to the local tax office in consideration of a part of the income deductions, such as the monthly salary of the worker and the number of dependents, and pays the wages for February of the following year by making the year-end settlement. The amount of tax to be paid is finalized by reflecting the details of the income and tax deduction report submitted by the employee from the amount of earned income for the relevant taxable period. If the annual total amount of tax withheld by the withholding agent every month is greater than the final tax amount settled at the year-end, the wage and salary earner can receive a refund during the year-end tax settlement. However, if the amount of tax withheld is less than the actual amount of tax to be borne, the difference must be additionally paid during the year-end tax settlement. For year-end tax settlement, each worker must submit an income deduction application form and income deduction documents to the company around the end of January of the following year. Please note that income deduction proof can be easily submitted online through the simplified year-end tax settlement service from Home Tax website of the National Tax Service. If you are a sole proprietor, freelancer, or an employee with income other than salary, you must declare general income tax. General income tax literally means a general tax on all sources of income, including interest income, business income, and pension income. This includes TV performance fees and tuition fees for teaching language at cram schools without entering an employment relationship. General income tax must be finalized and declared at the tax office having jurisdiction over the residence from May 1st to 31st of the following year after receiving the income. Even in cases where the bearer of withholding tax does not make a year-end tax settlement, or a person who leaves midway omits the deductible amount during the year-end settlement, a declaration to determine general income tax must be filed. However, you do not need to declare a general income tax if you have made year-end tax settlement with only wage and salary income. If receiving a refund due to overpayment after the declaration of general income tax, the refund is generally paid to the specified bank account on or around July 1st for national tax and August 20th for local income tax. According to the Restriction of Special Taxation Act, when a foreign worker files a flat rate tax application form to the bearer of withholding tax or the head of the tax office having jurisdiction over the place of residence at the time of year-end settlement or general income tax declaration, a 19% flat rate is applied. But please note that in this case, you cannot claim tax exemption, income deduction, or tax credit when calculating the tax base and tax amount. Residents of countries that have concluded an agreement for tax-free and exemption of earned income tax of a native-speaking professors may be eligible for tax-free or exemption from earned income tax if they meet the requirements stipulated in a tax treaty between countries. In order to be eligible for tax-free or exemption from earned income tax, You must be a native-speaking professor who has been invited by a university, college, school, or government-accredited educational institution for lectures or research for less than 2 years. In addition, for the school, as a bearer of withholding tax, to claim tax-free or exemption from earned income tax to the tax office, you should submit a certificate of residence issued by the tax authority of the country of residence to the bearer of withholding tax. Please note that you cannot receive the benefit of tax exemption if you are unable to submit your certificate of residence and exemption application form. But if you issue and submit your certificate of residence later, you can get a refund of the withholding tax. You can check the status of tax exemption between your country of residence and Korea and the requirements for exemption under the treaty for each country on the National Tax Service website. Local tax, as mentioned briefly earlier, is a tax levied on citizens to raise funds necessary for the coffer of local governments. Looking at the local tax structure, there are Seoul City Tax, which makes up the revenue of Seoul, and Local Autonomous Tax, which makes up the revenue of 25 local autonomous administrative units. As you can see on the screen, the local taxes are classified according to type, so let's look at some of them here. First, the automobile tax is a tax that has a characteristic of property tax from car ownership, and a levy imposed on social costs such as road damage and traffic congestion. Non-commercial automobiles will be charged 30% of local education tax. Next, property tax is a tax that must be paid by the person who actually owns the property as of June 1st of each year, the tax-based date. Please refer to the screen as the payment due date is different for each type. Resident tax is a tax for membership dues paid by members of the relevant local government. There is an equal share of the resident tax, which is paid equally regardless of income, the property share paid by business owners who run business establishments, and the employee share. Lastly, in the case of acquisition tax, the person who acquires the property subject to acquisition tax, such as real estate, bears the tax duty. Additionally, the calculated tax amount must be paid within 60 days of the acquisition of the taxable item. Please note that if you declare after the due date, you will be charged a penalty of 20% for failure to declare. You can pay these local taxes through the Seoul Local Tax Internet Payment System eTax, WeTax, or STAX hotline 1599-3900. So far, we've looked at the taxes that foreigners living in Korea must pay. If you have more questions, please contact Seoul Global Center for more detailed tax advice. Thank you.